Hey guys, so today I want to share with you my high yield Roth IRA, the realized gain loss for 2019. And I think I got my audio. I know my last video's audio was screwed up. I think I got my audio fixed now because I think I had the webcam recording and my mic recording at the same time, capturing audio. So the point of me making this video is you really want to watch out for what you put inside your Roth IRA. And I really didn't realize this until last year. And it comes down to taxes. So in a taxable account, when you sell a stock for a loss, you can actually write that off to lower your taxable income for that tax season. Now, in a Roth IRA, you cannot do that. Once you realize that loss, that's it. You've really lost. And I didn't realize that for a while. And, I was also new in investing, so I sold a lot of stuff that I should have held on to, things of that nature. But I think in a Roth, you really want to focus and build up on quality companies and hold for the long term. Now, my Chase Roth IRA, I go after high yield. And I really probably need to revamp that because I'm a little reckless. I have to admit, I'm a little reckless with my high yield Roth IRA. So I need to, and I still am to this day. I mean, even this year, I've bought some things that I probably shouldn't have bought. We'll see how it goes. But I really do need to focus more so on if I want to do high yield, there are ways to get high yield. Now, this video was sparked. It was sparked by a conversation I had with Bob Wright, and we were talking about bonds and corporate bonds, and it got me thinking. There are ways to generate a high yield without reaching so much. There are high yield corporate bonds. There are closed-end funds. There are BDCs. A lot of you are familiar with Main Street, but there are just one of them. There's plenty of BDC companies out there. There's just a lot of ways. Preferred shares is another way you can get yield. And if you manage it correctly, it probably would be a lot more safer way than the way that I've been doing it. So the problem is once you start down a path in a Roth, it's hard to change, because if you're holding stocks that are in the red, once you sell those stocks, you realize that loss, and there is no tax write-off. There's no lowering your income for the year and realizing tax savings at all. It's lost. So just to look, I just wanted to share with you what I had in my account in 2019 that I sold off. And the first one was CenturyLink. I had a cost basis of $1,677, and I sold it for $1,592. So a loss of 5% there. So I lost $85.26 in that stock. Now, if I would have held on, I'd probably be pretty close to even right now with dividends, and they've had a pretty good run up. And I think CenturyLink is actually more of a buy now than it was when I originally had it. Sony, I've talked about before. It was a small position. I thought I had gained some money on here, but I did lose some. I lost 5.71%. It was $27.93. Small position, but it's still a loss. And if I would have held on to that long term, I would have made, I think Sony's up around 70 something dollars now. Next one is Cloudera. It's a cloud computing stock. And I don't think it's a computing stock so much, but I lost 17.57% on that, which was $24. And the next one is a mutual fund. I actually didn't lose anything on this because with dividends, well, maybe I did. Lost 1.7%. Next one, this one actually is, I think there's two of these, but this was a penny stock. It's a pharmaceutical or biotech. I lost 8.57% on that, $4.53. And then another Fidelity mutual fund that I lost $3.57 on. Next one are all my gains. Another Fidelity. Next one are two Fidelity mutual funds that made a couple of bucks on. Next one is Tanger. I don't remember selling this. I don't know why I sold it, but I sold it for a 1% gain. JEPAX is an option income fund. Here's another way you can get income. I think this is paying a 7% yield monthly. I sold that for a 3% gain. IGR is a closed-end fund real estate investment trust. I sold that for about $7 gain. OUSA, O shares ETF, quality dividend ETF. I sold that for a 2% gain. Core Point Lodging Group. I think this is actually might be a buy now. I'd have to look closer into it, but it's the La Quinta hotels, and I think those would do well in a market pullback. Sold that for a 3% gain. PSEC, everybody's favorite business development company. I actually made 14.7% on that one. And then Advaxis, that was the same as this one. They did a split, and it was weird how it came out, but I actually doubled my money on this, but it doesn't show it. It's weird how they did this cost basis, but it shows 43.31% gain on that. That's probably my best trade I've ever done right there in a penny stock. I don't suggest you do penny stocks. That was just luck. CLM, a crazy closed-end fund that I don't suggest anybody get into. I did make 8.39% on it, and I won't talk much more on that. CLM is a normally a money loser, net money loser. And one I probably should have sold all of when I had the chance, and that's Nokia. I sold 50 shares at a 7.37% gain. Ashford Hospitality Trust, I sold that for an 8.1% gain. Another penny stock, pharmaceutical company, I sold that for a 26.26% gain. Washington Prime Group, I flipped that one really quick, I think, and I made 16% on that last year. Office Depot, a lot of people, I've highlighted that stock. That's a good trading stock if you can figure out the ups and downs of it. I made 5.74% on that one. Ford Motor Company I sold out of, and I made 11.68% of that last year. And last one is Cedar Realty Trust. I did pretty good on Cedar Realty Trust. That's another one of those under $5 7% yielders, and I made 12.17%. So all in all, I didn't do bad. The problem is a lot of the, actually pretty much all the stocks that I currently hold in this Roth IRA are all sitting in the red. And I can't, I'm not going to move out of them unless I really have to. I did take a loss this year on Nokia. I went ahead and liquidated about 52 shares. So I realized about a 30% loss on those shares. And I just put that money to use somewhere else. But I don't want to do that to everything. I mean, I could just wholesale start over and go into quality stocks, but I'm not willing to do that just yet. So I made a total realized gain of $352.52, and I maxed out last year of $6,000. So on that $6,000, I made 5.875% on the year, which ain't too bad. It's not too bad, but I could have done a lot better. I mean, if I wouldn't have sold out on Sony and CenturyLink, I mean, those could have, Sony would have been up 40%. CenturyLink, I probably would have been flat on. So I could have done a lot better. But I think the key with a Roth, if you're going to pick individual stocks, is be careful what you put in there. Try and go for quality as much as you can, because you don't want to be wrong and sell out of a stock and realize the loss, because the loss is permanent. It has no tax benefit like it would in a taxable account. The loss is completely permanent, no offset to your income to lower your taxes or none of that. So I hope this helped you. I'm building up my wife's Roth IRA in the Fidelity account, and that Roth is doing pretty well. I am deliberately buying quality stocks, large cap stocks mostly, in that account, and it's doing very well. And my high yield Roth is very volatile, and I don't suggest anybody do it. And I just wanted to put that out there. All right, guys, leave me a comment down below. Like, subscribe, share if you'd like. Use my Amazon link if you'd like. That'd be nice. And you guys have a good day. Thanks. Bye-bye.